Gold and silver prices ended weaker Wednesday after gains that pushed both metals to a 3-week high overnight. So what's the next move for both gold and silver? Joining us today is Peter Hug, Global Trading Director for Kitco Metals. Pete, good to have you back on.
Good to be here. Happy birthday, Daniela.
Thanks, Pete. So on my birthday, we're up, we're down. How do you see gold set up here, and where to next?
I mean, I've been constructive the gold market. Again, it's just like beating a dead horse almost. I don't think the Fed's going to move in September. Some of the recent data that's come out, ISM data, and some of the growth data coming out of the U.S. is at best tepid. I think a rate increase in September is off the table. There was some speculation after Jackson Hole that there might be a September and a December increase, which created some selling into a weak market. And I think people just reestablished positions. And, we're basically at a level in the gold market right now, which is, on a price basis, almost identical to where it was prior to Jackson Hole.
Interesting. So on the note of a Fed rate hike, Pete, Citibank came out saying that even if we do see a hike, it may not cause a significant sell-off in gold. Do you agree with that?
Again, that would be a question relative time parameter. I disagree with the statement just as a statement. I don't believe the gold market is factoring in a September rate increase. If the Fed surprises the market and does go a quarter point in September, I do think you will get a sell-off in gold. I consider that sell-off, though, to be a buying opportunity, but I don't think that gold will not react lower if the Fed surprises in September.
So gold looking tired here. I know we were talking about this offline, so it needs a catalyst.
Yeah, I mean, gold is, it's gone up 25% on global monetary easing. I think the Fed, whether it raises rates, and I don't think they will, but let's assume they don't raise rates in September and they stay at a quarter point. From that perspective, the U.S. still on a yield basis is still much more attractive than the euro and the Japanese yen, which are at zero and negative rates. So that will still create some dollar demand from a yield perspective. I think gold is getting a little tired here. I'm not suggesting that you sell your gold and the market is going to tank, but it's going to take another significant event. By that significant event, I mean it's not going to be a Fed meeting. It's going to be maybe a stock market meltdown, something that happens with European banks, some announcement from the Japanese that they might be a bit more aggressive on their easing policy. One other catalyst that could get gold moving again. It's having, it's at a reasonable valuation now, in my opinion, at 1350-ish level. If we can get up through 1376, I'm going to be very bullish very quickly. Right. But until it does that, I see this market sort of meandering probably right up until the Fed meeting in 2 weeks.
All right. Well, we'll see first how it ends this shorter trading week, Pete. Thanks so much for joining us today.
You're welcome.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.